Everyone, stick with us versus herd. Today we're going to be looking over at the overall market and where we think it's headed, and if we're on the verge of a collapse. Now, I'm not normally Mr. Doom and Gloom. I'm a bull. Always will be a bull. I prefer trading uptrends and downtrends. But the data is not lying to me right now. Like a lot of people have asked me for quite a while, especially like for the last 3-4 months. Like, hey, Nick, what's going on? Because they know that I trade stocks and do all this stuff, right? What's going on? What's happening with the market? Why are we going down? Is it, we got to get near the bottom soon? And I keep telling them, like, this is not the end. This is the beginning. And that's, I guess, like the mentality when you're in like a 14, 15 year bull run. And the only thing that prevented a collapse back in 2020 was the Fed printing unlimited stimulus. But, in my opinion, we're at the forefront. The market is trying to get ahead of how they view, what the future is going to be like. And right now it's not good, right? Now, could the market get oversold? Absolutely, absolutely. But right now, I think like everyone's still a little bit too optimistic of what can happen, right? And, the biggest thing right here that we're fighting, obviously the biggest thing is inflation. Right now we're at 8.5% minimum inflation. We know food costs, energy costs are through the roof. These are the numbers that the Fed goes off of, so I'm just going to use them. And, we're at historic highs, but this is what you get when you print unlimited stimulus money. And that's, just this week, California said, hey, I know times are hard. We're going to give you guys $1,000 check in California, but that's not how, that's what got us into this trouble, into big trouble here. We printed, due to the fear of the pandemic, we printed for businesses, PPP loans, for individuals. I mean, anybody that wanted a check got a check. And probably then some. I mean, that's what got us in trouble. California is like, hey, we know you have a hard time at a pump. Here's $1,000 per person, right? Like this is crazy. But the scariest thing to me right now as well is that the Fed was supposed to be reducing their balance sheet in June, right? We're supposed to have quantitative tightening. And as of a week ago, so the data is always going to lag behind. This is federalreserve.gov. This is a legit website. Actually started to go up. We had in May, we had a tick down, but June started going back up. Like, what is going on here? Like all through 2022. This is just year to date. So this is just 2022. All through 2022, we are higher than when we started, right? Like, and the market has been plummeting. I mean, the S&P is in a bear market, the NASDAQ is in a bear market, and the Dow is just a few points away, like 5% away from a bear market, being down 20%. I mean, what's going to happen? Right now we're raising rates. Fed has not been reducing balance sheet. Are they just lying to us? Are they not going to do it? I mean, right now, as we know, like the credibility of the Fed is, there basically is none, right? There basically is no credibility. Existing home sales as well. Like right now, a lot of realtors are out there saying, "Oh no, this isn't a crash like 2008 because it is, basically because people that got loans got them at a super low rate. They could afford the loans. Everything's gonna be okay. You should it's still a good time to buy." Meanwhile, interest rates are at 6%. So what's gonna happen when interest rates go up and home prices are through the roof? One has to give either home prices or sales. And right now sales are down. Sales might tick back up once home prices come back down. Everything's going to kind of balance out. I'm not saying we're going to like crater or crash or anything, but I think that in terms of housing, things will normalize. Right now we're kind of in this weird mode where we just hiked interest rates by a lot of points in a very, very short amount of time, and the market is just saying, hey, let's put a pause here. Can we afford this $600,000 home at 6%? Can we do that? And they're going to add more. Let's just kind of see what happens. And we already know that there's been a record amount of price drops, over the last month or two as they've been increasing rates here. Now we're still waiting for the average home price to kind of top out. It hasn't topped out yet, so we'll see what happens. I mean, obviously there's supply and demand. If there's less homes for sale, sure, the prices might not drop. So we're kind of in this limbo period where we're just kind of waiting and seeing. Manufacturing PMI, I mean, it is at a low here. I mean, this thing has cratered. I mean, it was way below market expectations, 56 points, and pointing to the slowest growth in factory activity for almost 2 years. So we're starting to hit that contraction period, right? So, when the markets are starting to turn and stuff like that, it takes a long time. People view like the stock market as like the economy, but there's a lot of things that push the economy, forward or move it back, right? And manufacturing, retail sales, homes, car sales, we're going to look at all that stuff here. This makes up the weight of what the U.S. economy is. It's not just because, your Zoom shares are down or Peloton shares are down. I mean, it doesn't really matter at the end of the day. If Peloton is down and goes out of business, it's not going to crater the U.S. economy, right? Now, U.S. business activity is at its weakest since July 2020. I mean, so the difference that I will say here that we're experiencing is we're not going to be getting that stimulus money this time. There's no checks coming our way unless things get real bad. And when things get real bad, that's when they'll start, cutting rates. But right now, everyone still feels pretty good. Unemployment is low. Everything is okay. Everyone's feeling okay. As long as unemployment is low, and they love to say we have record unemployment, record lows in unemployment, which is true. All of it is true, right? Like with 3.6 unemployment, which like historically average is at around 5%. So historically, I mean, it's great historically, but even Powell said, hey, we are willing to sacrifice jobs. People are going to get laid off to control inflation. We're okay with that. And it's the first place, is the most bloated place is, tech layoffs, right? Tech layoffs, there's a lot of bloat in the tech companies. When we had the epic bull run, a lot of money was flowing into them. They were on a hiring spree. And, if you go to Crunchbase, you can kind of look at, I'm not going to go through the whole list, but it looked like on average, companies right now are laying people off between 10 to 20% of the workforce. A lot of places like Facebook/Meta have hiring freezes. A lot of these companies like Tesla have hiring freezes as well. Robinhood, they laid off 10%. I mean, kind of going through all this. I mean, right now, scroll this is at 23%, 20% here at BlockFi, which actually just sold. Coinbase just bought them. It just kind of go through this, and you can kind of see it's at, basically anywhere between 10 and 20%. Which, this is not including all of them, but right, these are some notable of in the tech space here, which, we a few months ago, which is crazy. Just a few months ago, we were like, hey, we can't get enough people. And all of a sudden there's a hiring freeze and, massive layoffs, 10, 20%. I mean, this is, I mean, how quick this can go downhill, it is showing us right now. Retail sales also softening. I mean, obviously, people, if you're paying more at the pump, you're paying more for food, you're not going to be out doing whatever you're doing, right? You're not going to be doing whatever you're doing. You're not going to be having, and if you're worried about your job, you're going to be more cost conscious, okay? And then U.S. consumer sentiment obviously is going to be at a low. Biden's ratings are at a low. I mean, everything right now is at a low. Stock market is at a low. I mean, this is just crazy. GDP also is starting to contract here, which is not good. This is the first time since Q2 2020 we're starting to see that. Obviously, in Q2 2020 we had a massive boost to the upside, but what brought that demand? Fed stimulus. Right now, we are not getting that stimulus. So I think, honestly, we're probably in for a rough ride. I mean, we're in for a rough ride. I mean, going into some of these charts here, looking at the NASDAQ, which is at the lows now, let's go into last 5 years. I mean, we're still pretty high up here in terms of, where we were back in 2019 was like, 6,000. And then in 2017, we came up here, but like 10,000. But even we took out, we're starting to kind of eat into, this massive run. Could this run, can it give it all back? I mean, in my mind, absolutely. Now, will the Fed allow that to happen before they start cutting rates? That is the question. Is like the question for me is how much pain will the market have to endure for the Fed to start acting. And I think, obviously, I think that's going to have to be above 5% unemployment, 6, 7, 8% unemployment. Because if people are losing their jobs, I mean, they're going to start, as they raise rates, it's going to make people unemployed. They won't be able to buy anything. I mean, basically, they're contracting the economy forcefully by raising rates, but they're raising rates so that way when times are really, really bad, which, I mean, people think they're bad now, they're not that bad. Let's just be honest. They're not that bad right now. It's going to get a lot worse. So if or when that does happen, I hope it doesn't. I pray that we can just get a V-shaped recovery. We just go back up. Everything is okay. But right now, the data is saying otherwise. Until that data starts turning around, we're going to be in a little bit of trouble here. We want, as long as unemployment is low, everything's going to be okay. But we're starting to see things starting to tick up. Demand is starting to slow down. Prices are starting to come down. Economy starting to contract. So, I mean, that's what the Fed wanted to do because they had to slow down demand because they printed so much stimulus. I mean, the worst thing about this is it's like 100% self-induced. If we just let the market correct itself naturally, we wouldn't have to be meddling with all this. And sure, you could be like, well, we could have been like in a depression, stuff like that. I mean, I think they overdid it. I mean, we didn't need stimulus all through 2021. We didn't need QE all through 2021. They overdid it, and now we're going to pay the price. So if you watch this video to the end, as always, stay safe, stay green. It's us versus herd.